You should always be asking for seller financing on every deal. I'm Tim Diesel. I'm a commercial real estate consultant, and today I want to talk to you about seller financing and the way to structure it. Okay, so suppose you're looking at an apartment building or an office space or something that you kind of like, and you want to send an LOI, a letter of intent. I made a video about that and what to do and how I walked you through the steps. Okay. And you see a property and you're kind of interested, you're not sure, and let's say you have the cash. Let's say it's $500,000 and you have $500,000. Ask for seller financing anyway. Always, always, always. 5 or 10%. I always start with 10. Even if I have the money, I always ask for 10. Because if you structure it right, 10% goes a long way. On $1 million deal, it's 100 grand. You may not need it, but if you can get it, it really helps out. And I'll tell you why in a few minutes. Now, depending on the deal, I will tell you this. Let's actually clear this up a little bit. On industrial properties, I found it's a little bit harder to get owner financing. Most of the time, sellers generally don't. Now, maybe I've done one. I'm honestly not too sure, but I haven't seen a lot of industrial deals done that way. Office, same thing. Very little, just the way they run. Retail, multifamily, that's really the majority of the time. Land, you can get it too, but I try not to mess with land too much. So, but let's say in this case, it's a retail building, it's $1 million, and the bank will give you 70, 75%, and you're asking for 10 or 15%. So you've reduced your downstroke a little bit, and now you don't have to worry about renovations, because whenever you buy a property, what happens a lot of times is investors want to get in there and they want to fix everything up day one. The best thing to do a lot of times is kind of see how the property behaves. Now, we don't all have that patience. I get it. But you want to get in there and you want to kind of see how this thing is going for 3 or 6 months. What are the renters like? Well, what is it doing? You don't want to just get in there and start fixing things up. And if you do, that's fine too, but you should have a little bit of cash reserves. Seller financing helps you do that. Now, getting seller financing, so I gave you so far the reason why you want seller financing, right? You want to keep a little more cash in your pocket. Most of the time, the term I've seen that works is 3 to 5 years. If they say no to 5, they'll say yes to 3. They say no to 3, you do 2. Very important on your seller financing, do it in a 30-year term, but it's due in 2. So it's amortized over 30 years. If you can get it, you want to do 30 years, and then it's due in 3 years. In 3 years, maybe you'll do a balloon, and you could refinance it, you could sell it, whatever you decide to do on that, it's kind of up to you. Make sure those payments aren't ridiculously outrageous. Now, to entice the seller to give you owner financing, the reason is, hey, listen, I'm going to do some changes to this property. I'm going to need a little bit of my cash. Can you help me? And most of the time, they're going to say yes. They're not going to say no if they see you're trying to do something with it. On a property that's stabilized and there's really nothing to do, it's difficult to get owner financing. Most of the time, you're going to get owner financing on C property, right? Maybe B, you could do it on B if you can convince the seller that you're going to do something with it. And it just kind of depends. But the advantages for the seller is taxes, right? It's a big tax savings for them. They get cash flow after they've moved on from the property and they don't have to do very much work. So seller financing can be very enticing. Now, what else I do is I always tell them, listen, on the first payment, I'm going to give you a big payment, either payment number 1 or on month number 6. What I do is, let's say I've got to make payments of $1,000 a month. What I'll do is on payment number 1, I'll pay for 6 months up front, or payment number 6, I'll pay for 6 months then. So this way, they're expecting one big check. I found that helps. A lot of times, if you give them a little bit of a bonus, it does help. If they hold the note for me for 5 years, I let them know, listen, every year I'm going to give you just a little bit more money, just a kind of little bonus if I have something there. And you can structure these deals any way you want. There's no bank involved. This is just a relationship between two parties. However you do it, you can. Getting seller financing is kind of the holy grail of investing, right? There really is no credit check. Most of the time, I haven't seen them do that. They want to, their collateral is the property. I mean, if it goes bad, which it shouldn't because they own it, You should be okay with that. Now, depending on how you want to structure larger deals, and this is what I have done successfully a few times. So if it's $1 million property, and I'm just going to give you easy numbers so you can wrap your head around it. If it's $1 million property and let's say the seller is willing to do 40 or 50%, why not? If you ask, most people don't ask for that much. That's the reason why they never know about it. They only ask for 10 or 20%. Ask for a lot more if you can. And if 50% of the property is owner financed, and now you only have 50% of the property that you need a loan from, well, essentially, you have to pay the closing cost here and there, and you're talking about maybe coming up with 5%. So if you structure your deal right, you really don't have to bring in a lot of money. Now is very important. Do not do seller financing if you're not going to cash flow enough, right? Because you need to make money on these transactions. Don't do a seller financing deal if you notice that there's barely any left for you. Maybe walk away from that deal. And seller financing is also tougher when the economy and the market is better, because sellers know you can go out and get a loan. When the market is down, it's easier to get seller financing. 2011, it was much, much easier to get seller financing. Sellers knew they would have to deal with you because banks were not lending. Now, it's a little bit of a challenge because banks most of the time will do the lending, and then sellers are saying, hey, if you don't have any cash, why am I selling to you? So you really have to be creative in how you structure it. What I want you to take away from this video is every single LOI, every single offer, ask for seller financing. Even if it's 5, 10%, I always ask for 25%. I start strong and I see what they say. If they say no, then I say, okay, fine, I'll scale it back to 5%. Make sure you ask for owner financing. Otherwise, you're leaving that on the table. All right, I hope that was helpful. Let me know if you have any questions on this video.